All right, good morning and welcome to Fobi's shareholder call. In our webinar today, we'll be discussing Fobi's financial highlights. My name is Dev Seidel and I'll be the host of the webinar today. Along with me, I have Rob Anson, Fobi's CEO and President, and Mark Lotz, Fobi's CFO. The agenda today will be fairly simple. As it will follow, Mark will start by going over the financial highlights. Next, Rob will provide more detail and insights on how these financials relate to Fobi's business and talk about recent milestones and that the company has completed. And then we'll finish off with a QA. You can use the Zoom QA function below. Please use that one to submit your questions, and we will save time for the Q&A section at the end, where both Mark and Rob will answer your questions. So I'm going to start off here, going to our first slide, and I'll pass it over to you, Mark.
Thank you, Devin. Good morning, everyone, and thanks for attending. I'll speak to the revenue, starting off with slide 3. Revenue has increased by quarter for the last 4 quarters, and this period saw a significant increase of 59% to $923,000 from $580,000 in the prior quarter. In the prior quarters, we acquired a number of assets which began to report sales, and this led to the significant improvement. We've also seen a diversification of our revenues through multiple products now and in multiple regions. The US and the EU account for our largest increases. Operational expenses for the quarter totaled just over $5 million, of which $2,870,000 was a non-cash share-based compensation, which I'll speak to next. Net income for the period was a loss of $9,474,000. But as we can see from this chart, the largest share of the losses was a non-cash item, share-based compensation of $5.4 million, leaving us a net cash loss of $3,858,000. Operationally, cash has been deployed in the development of a dynamic suite of solutions, employing a team of over 70 full-time and contract employees. The company made 2 loans in the process of acquisitions for Passwallet and Qples, and these amounts totaled over $1 million. The company is contractually entitled to receive these back within the current calendar year. Accounts receivable has increased from $1.2 million to $1.9 million in the quarter, as the company rapidly grew its German and US operations. A significant portion of the AR has since been collected, and post the period end, much of the remaining is due from CRA in the form of GST refunds, which have been recently validated and we will be receiving shortly. Total assets grew significantly in the period from $12.3 million to $15.2 million due to successful M&A activity in the quarter. This includes a large component of intellectual property, accounts payable has increased $207,000 from the prior quarter. Although the company didn't really see an increase here, this was more due to timing of payments. Also, as part of the Qples acquisition, the company recorded $577,000 of contingent liability, which is directly tied to sales performance bonuses, or contingent consideration, as we call it. This will only be paid if certain revenue thresholds are met on the Qples assets purchased in the quarter. If the targets are met, we would welcome the expenditure. Working capital has declined slightly from 8.9 million to 633,000. And again, I stress a large part of the expenditures has been related to non-cash share-based compensation, which is based on a Black-Scholes formula requiring a significant allowance for the volatility of the stock, which we all know has been quite high in the period. The other reason for the decline in working capital has been, as I said earlier, an allocation of cash resources to acquire intellectual property. And with that, next slide. Rob, all yours.
Thanks, Mark. A couple of things before we start. I'd like to point out is working capital, Mark, was 6.33 million, not 100,000. And when we look at operational expenses, that was for a 6-month period, I believe you were speaking to.
That's correct.
Yes, just wanted to clarify that so people don't fall off their chair.
Thanks for clarifying.
Great. Thank you, everyone. So we'll start today by speaking to key products that we released during Q2, which was KaiCare, Empower Clinics testing integration. Obviously, for us, when we look at interoperability, this was a great use case for us. It's cut our teeth on when we look at the ability now to integrate with any existing LIMS healthcare providers. This has given us great opportunities as we discover the healthcare is a vertical and significant opportunity around interoperability and automation as per demonstration in our most recent WebEx. JANM integration was a very significant product release and key partnership with us as we saw great success in our use case launch at the NCAA event in Florida with fully integrated ticketing solution. SOC 2 was a very significant achievement for the company for many reasons around data security and integrity and operational security. This helps us, as we see here, moving into healthcare and continued process around data security and privacy and all of the other compliance check boxes that we need to check during our government and city, town council opportunities. Various contracts that we've signed and released, as everyone's aware, I'm sure. Stratosphere, which was our check fax venue management solution in Las Vegas. We signed and announced deals with University of Nevada, Las Vegas, and University of Nevada around NCAA men's and women's basketball, and for the universities, once again, check fax venue management. Revel XP, which is our wallet pass engagement platform that we ran for them. S4S was obviously when we looked at the world of reduction of carbon footprint was a key use case that we've leveraged over and over. That was around gift cards and our wallet pass engagement platform. One of the largest golf course owners and operators in North America. We've now got a fully integrated member card, and wallet pass engagement is on the roadmap there. The RSPA Inspire Conference, once again, check fax venue management, as we are now looking at re-entry to the world as we once knew it, and what does that look like from a digital transformation footprint. And the biggest one I would say for us in value of all was our Amazon fulfillment and reseller partnership, which we announced. The distribution direct from our manufacturers for our new Fobi 3.0. Direct distribution through the various facilities gives us the ability to now not just grow the product, but scale incredibly fast and eliminate that heavy burden and load managing all of our own distribution. Obviously, it was an incredibly busy quarter for us when it came to strategic M&A with our contract and solidification of the Qples deal. And as we closed on Pass Wallet and entered into our LOI to acquire Passworks. This was a good one for us. I think, obviously there's another increase in revenue. We've been very clear as to we're building a scalable, sophisticated business. And as I've said previously, this is very difficult to gain and judge perhaps is a trade. This is a long-term investment. We've been very clear as to the objectives and value proposition of where we started, but more importantly, where we're transforming to with the mergers and acquisitions as discussed on the previous slide. And of course, starting with Pass Creator and others. When I look at the revenue this quarter, I was actually very satisfied with it, simply because of the fact that a lot of the US opportunities with the US Thanksgiving and of course legal shutdown mid-December puts us in a very good condition and shape here for next quarter, whereas we expect to see continued growth once again. We're building a long-term viable, scalable business. And for me, I don't judge it based on day, month, quarter. I look at the year end as to where we started, where we ended. And I'm extremely confident here as to the growth and trajectory and scalability more so of the products and where we're headed. So I look ahead. Obviously, we've had some significant news announcements. Our next quarter coming up. And, we've been very active as to doing our best to educate our shareholders. Obviously, I spend a great deal of time, especially in moments like this, trying to answer and give as much insight as I can as to where we're at, and best of my ability to share the limited capacity I have as to where we're headed. The one thing that when I look at a big component of validity to me is in third-party validation. I know the shareholders don't get to see all that's happening in the background, of course, but there's some very exciting things from the capacity of not just current partnerships and projects, but more so new opportunities and verticals as we continue to release and validate new technologies and microservices which provide this automation and interoperability. And as I mentioned here, with the hopefully, knock on wood, continuation of elimination of restrictions and the new world as we come out of COVID and the pandemic, we are extremely now well positioned to take full opportunity, not just in that process, but working with our services team now to be able to facilitate a lot of the heavy lifting for organizations that are trying to catch up. New products, as I've mentioned, we've seen great growth in product capabilities with our engineering team. We have an incredible team that's Tamer has built in-house, and as we can move extremely quickly and we have the horsepower now, was one of our biggest risks last year is most companies are witnessing now is human capital. Our team is extremely solid, and we're now able to leverage that to create different line revenues. And more importantly, as I've said, eliminate that need and burden, if you will, of heavy lifting for partners that aren't set up to transform their business at the rate and speed of which current climates and conditions are moving forward. One of our biggest focuses now is an early stage company was always channel reseller, simply managing our current cash rate and opportunities, of course, running in parallel to find balance. Has been really focused now for the first time is standing up a direct channel sales team. And it's something that we're extremely focused on, as we do have a multitude of products, is now hiring in-house to expedite and grow these opportunities and product focuses and truly create product specialists. For us, obviously, it's not the easiest story to tell, as we have so many different capabilities and are able to stitch so many things together. Having our team very focused on now becoming product owner and product specialist is the key, and very successful early days on our small direct sales channel team. Our pipeline, we've got incredible opportunity. I think one of the biggest things now is, as I mentioned last quarter, is finding that balance. I've had numerous calls and emails and messages over the last week here around, we were surprised to see revenue growth because we didn't see a great deal of news releases. For us, it just shows the balance and the monthly recurring model of SaaS that we are building, and growing gains from our integrated partners of previously disseminating press releases around for the point of sale partners and others. And as we continue to focus on the small to medium SMB landscape with Square and others, this is right in our wheelhouse. So the direct sales channel team and partnership team here has their plates full, with, of course, great opportunity. And when we start to look at where we're headed as far as some new partnerships globally, puts us into great focus now for Australasia and APAC. The revenue side, we expect strong revenue increases. For us, there's new verticals, new opportunities, new partnerships. And as we move out of the pandemic, this is great news for us because businesses are in need of transformation. And I expect to see continued growth as we move from not just next quarter, but throughout the year.
Great. Thank you both, Rob and Mark, for that in-depth analysis of the financials. We'll now move into the Q&A section. Again, there's quite a few Q&As already lined up. If you'd like to submit, you can use the Q&A function below using Zoom. But we'll start off here, Rob. And what I assume to be about the share price for the first question is, how can you sit here so calmly and convey a message that nothing is wrong?
Well, I'm not sure what's wrong. I'm guessing they're speaking to the share price. I'm not really sure how I'm supposed to sit here other than calmly. This isn't the first time, if you want to call it adversity, if you will. We've started at 80 cents. We went all the way down to 5 cents. Back up to 2.97 a few months later, down to 92 cents a few months later. Big consolidation at the $1.20 level. Did our financing and went to 3.98 a few months later, and down to, not sure where we are today, 70, 71, 69, whatever the number is. Look, I mean, adversity is an interesting thing to me. If you can't deal with adversity and volatility, then the small cap is not going to be your friend. We are a young, emerging small cap tech company that's been extremely active and busy, and not just, of course, in mergers and acquisitions, but we've now looked to create global scale of which we have. I don't never won, and I never will be for excuses. You want to argue with reality, you're wrong 100% of the time, and the broader markets are what they are, and certain global events are what they are. I don't look at those at all. All I look to do is each and every day is, how do I make the best decision possible for the benefit of the company long term? Yeah, if you make decisions based on it's Monday, the futures are off 500 points, and what are we going to do today? You're doomed, because when you, just as we see here, this is why the big banks always win, because I've had numerous people over last week tell me they got hit on their stop loss and lost half their money. First off, I don't control obviously the markets. I don't control the share price. I wish I did, but for us, when I look at it, is as I've said, this is a long-term investment. Nothing goes straight up. Did I expect to see where we, are today? No, not at all. But the reality is, we're where we are, and the company is itself isn't reflected in the current value of today, I believe. And as I said, it's extremely focused on making the best decisions. Our team is focused on execution. And when we look at the markets, are they going to stay here? I don't believe so. But I also don't control many of the third party influences and beliefs. And people panic, they sell, and there's a new shareholder base. And like I said, it is what it is. This is my fourth time that we've seen this, and I'm pretty certain it's not going to be our last time. So this is all you can do is continue to focus, continue to execute, and at the end of the year, it'll take care for itself. This is one day, 1 week, 1 month, 1 quarter. Everyone has their day per se, and I'm very confident as to where the next quarter is going and where we're headed.
Why would you put out a news release about the company losing 5 million in Q2?
Yes, that's a funny one. We don't put out a press release around the company losing $5 million. Obviously, when we put it up on the wire, the providers pick up and go through and create their own titles. Is that reflective of true loss? No, well, no, it's not. I think Mark did a pretty good job as to explaining that, as to how the number comes to that. The share-based compensation is what it is. It's a measurement. The true actual burn of the company is just over 600,000 per month. So it's not truly reflective in that number. And like I said, at the end of the day is I don't create these rules, and as to how they're reported, I can only abide by them. So it's, to me, it's something that's a bit distorted per se, but it is what it is. And they have the ability to put it in their titles as to whatever they want. And it's just like people can hang on to spin negativity or focus on positive and optimism. And that's up to each individual shareholder and the markets. So it is what it is.
There's quite a few questions on share price, and I know you just touched on it in the previous question, but just to see if you want to add anything. Question is, how are you going to fix the share price?
Fixed. Well, once again, I don't control the share price, of course. We've been looking at minimizing a lot of the news, if you will, around what people say is non-material. It's obviously as my dad would say, if you want to make everyone happy, go sell ice cream. Well, we're obviously, when I look at news, there's certain people that want to see as much as they possibly can get to make a decision and understand. There's others just only want to hear about, revenue in term of deal. So we're trying to do our best to find that balance. And like I said, we're Q2, which is calendar Q4, is challenging simply because of legal and negotiations. Hence why I'm very confident as to our next quarter and the acceleration and perhaps of some of the news flow to come.
What happened to the NASDAQ uplist? And is this something that is still in the works?
Yeah, NASDAQ uplist, we've checked a lot of the boxes and down that road. It's the same side of it here is I don't see if I put out a news release tomorrow that company is doing a 5-6 to 1 split to meet the requirement for NASDAQ, I'm guessing my inbox would be absolutely flooded and my voicemail would be full within half an hour. So once again, we're focused on execution. You can't force every issue, just like I can't make a market to stay $3 for the 30 days. For me, at least, I've seen other companies, do splits and they're now trading lower than they were before. So like I said, for me, I'm looking at long-term shareholder value and making the best decision. And I currently don't feel that that is the best decision for long-term shareholder value. And in no ways am I panicked to make these irrational decisions, as some may suggest. We continue to look to execution. You have to execute and forget about all the noise. Right now, there's a great deal of noise. And as I said, for us, we're just simply focused on doing what we do, continue to deliver, continue to execute. And, tough time and pain are only temporary. And as I said, I've seen this before. I'm not panicked whatsoever. And times will pass and things will get better. And that's all you can do. Build a business and execute.
How can you justify $5 million a quarter burn rate / loss?
Well, this is not sure if people are listening or perhaps they're not attending this, but I think we've already addressed this. Our actual burn rate is this quarter is about 1.8 million. So as I've said, and as Mark alluded to in his presentation, the share-based compensation Black-Scholes model plays a big part of that, and as well as the loans that we did to clear up some of the creditors for the acquisitions. It's not a true reflection.
What is the company's biggest risks for the remainder of 2022?
Biggest risks, for us, it's very easy in our position with all of the horsepower and capabilities of which we do possess to get distracted by, I like to call it shiny balls. There's so many opportunities. We went extremely wide early days on intention. It was to validate the technology, learn as much and fail as fast as we could in some cases. But to really hone in on the business model, the pricing model, and to learn and listen as to what the takeaways were, what the customers and clients were looking at, and what improvements and updates and modifications that we could make to our technology. Out of that is we're starting to see now, we're more focused on going very narrow and long. And this is why we're starting now to gain traction in the revenue, perspective, quarter over quarter here. And when I see the asks is we get approached every day. Can you do this? Can you do that? And fortunately, I would say the answer is yes. But we're very, very cognizant now as to the next quarter, the next coming quarters, as to our time management and looking at just simply sticking to the execution and strategy and plan that we have in place.
Adding
I would just say, sorry to cut you off, but I would just say for us, it's that is always the biggest challenge. It is time management, and I'm the biggest challenge there because obviously not having a dedicated IR person, takes away a lot of my time. There's certain people that email me, message me 7, 8, 9 times a day, which, I simply can't get back to anymore. I do my best to give visibility and get back to people within a 24-hour period. Sometimes faster, of course, in other circumstances, but, I need to be given my time back as well to build the business, execute the business, and spend more time on focus on introductions and working with institutions and family offices and doing retail presentations again. It's been an incredibly busy 4 to 5 months of late, and being tied to the business a lot. I'm making very cognizant decisions and focus now of my time allocation to get back to telling the story, because we are a young story and a great deal of the US and European investors have no idea who we are. And that's where my focus and time is going to be, stepping away from a lot of the business development and opportunities, and putting that on the shoulders now of our internal team, now that we have those resources in place, and spending my time focusing on the introduction now and growing the story. And quite honestly, now that travel is becoming easier, getting on the road again and demoing our stories in person is something that I'm greatly looking forward to.
You said the first year was crawl, second year was walk, and third year is run. When is the company going to start to run?
I think it's, there's a lot when it comes to what we've done here and transpired, as we've seen with 3 acquisitions in this reporting quarter. We've been running full rate capacity, I can assure you that. Very long days of integrating all of these networks and systems right across the board. As I said, the shareholders unfortunately don't get to see what's happening in the background. I can assure you that we are running, and some of these things obviously take longer than we anticipate and want. And the bigger the companies now that we're dealing with, some of it is around simply privacy and disclosure. So there's going to be a ramp up of news on the things that we have been working on, that we have implemented. And for when I start to think about what that looks like, Devin, once again here is I can't get hung up and run and what people want us to do. We're going as fast as we can, responsibly. We're very, very strategic and methodical about the growth and positioning of the company. We're not playing checkers here. We're playing a game of chess. And there's few things here that strategically, patience plays a big part. And I think that's something that I've learned a great deal about in the last 6 months to a year, is strategy and patience as to timing, and not just blowing your brains out for the sake of blowing your brains out. And I told you so. If you look back, when companies have runs, it's after consolidation and weak hands are shook. And I think right now is we're at that point. And it's, for me, I don't get caught up in you're up this much, you're down that much. It's like I said, you're never worth anything until you sell, or you've never lost anything until you sell. So we're looking to continue the plan and execute the plan. And I think what I can say is that I'm very confident as to the velocity of projects that people were expecting to see perhaps on the horizon here.
During the webinar with Dragonfly and Empower Clinics, you mentioned healthcare a few times. Will healthcare finally become a focus of the company?
Well, healthcare has been a focus of the company. And as I said earlier, there's a lot of different opportunities and levels, quite frankly, within healthcare. When I look at the opportunity of healthcare, SOC 2 was one of our biggest challenges. Of course, that when you look at audits and checking boxes, that's one of the key ones for us as well. Now we're working through the ISO, is another certification that for Europe and global is a big one, and it's something that we've begun that process with. Healthcare is perfect for us for many reasons. The verified credential aspect, the utilization of wallets for identity, the interoperability as a data first company is a key one. The way we manage and store data, whether it's fully encrypted in storage, in motion, it's all de-identified. And as I said, the integration with Empower Clinics was a key one. Gave us a great deal of insight as to opportunity, holes and gaps in the marketplace, but more importantly, it provided us with the means and ability to build those fundamental building blocks. And the way that Tamer and our team has constructed everything with building microservices gives us great agility and, enables us to adopt and integrate all existing IT infrastructure. So healthcare most definitely will be something that we'll be a lot more active on and focused on, and a great deal to share.
This one specifically, there's a few about Qples here, so I'll try and combine them into one. Why are you so bullish on Qples and 8112? And can you explain why so much effort is going towards coupons, discounts, and 8112 with the company now?
Sure. Let's start with the first part. Why am I so bullish?
Yes.
When I looked at the opportunity of Qples, to me, it's the same thing as we saw with COVID. So I've said we've seen 20 years of digital transformation in the last 2.5, I guess now it's been. If we go back to Y2K, maybe I'm dating myself a bit here, but there's billions and billions of dollars made simply in services rendered by transition and transformation from old to new. Much like we're about to see here with Metaverse and 3.0 and whatnot, DeFi and blockchain, this transformation from old to new is extremely lucrative. And it's always the early adopters of those technologies. It's always the companies that become gateways, if you will, and bridges that lay fundamental blocks that enable these large organizations to move and shift from what they know today to the next evolution of tomorrow. And that's exactly what I saw in the Qples, being able to transcend what clearinghouses and publishers are doing from a marketing perspective of 8110 to the new standard of 8112, utilizing the digital footprint of the wallet, but more importantly, bringing the attribution and real-time measurement, which our Fobi data exchange brings to the table. That is my excitement and why I'm so confident or bullish as it was put here. That's exactly it. I'd rather be an early adopter, early mover than late to the party. And we're on the cutting edge of new technologies and transformation. Today's news release with P&G and Target and others here, this is something that we've been brought into at a very close level. And it's now put us in a position to reap some of these rewards and risks, if you will, as to all of those that thought I was crazy as to investing into a coupon and promotion company. The marketing dollars that are deployed, we're talking trillions of dollars a year by CPG manufacturers. Now the new standard through Coupon Bureau and 8112, we are that gateway. We are the gateway in transformation from old to new. We have every level covered. And this is why some of these groups, as people will start to see here, have knocked on the door, but more importantly, came and sitting at our table. What was the second part to that? I apologize.
Just why so much effort moving forward with coupons and discounts? And I think you touched on that there. Yeah,
I think quite honestly, part of the naysayer feedback I have had in the last, let's call it 3 weeks a month, is people refer to them as bullshit waste of time and resources as far as WebEx events, but I completely disagree. Our WebEx series that we most recently had with Mike and Eddie and Brandy from the Coupon Bureau, we had tremendous outreach from the CPG manufacturers to that. That's a win. Where it's a win-win in this case here is, to me, it's about shareholder understanding. We're talking about things that haven't existed before. We're talking about new technologies and applications that are transcending and about to transform some of the largest industries there are in physical retail, as we see here with Mary and her role. And when we look at the shareholder education piece, to me, that's the biggest one, because I'm perplexed around some of the people that, simply don't understand what it is we've done to date and where we're headed. And shareholder education is a very big focus of ours, letting people understand, seeing firsthand, not just the transformation, but the application. What are the problems? What is the value proposition? Why Fobi, if you will? These WebEx series have created huge momentum for us, not just from an industry perspective, but there's been a lot of great feedback from shareholders as well that have a better understanding as to where we're headed and why.
This next one relates to a little bit of what you're talking about there. Today's press release with Procter & Gamble and Target, these are obviously very large brands and retailers. Are these potential new clients for Fobi?
Yeah, as I said, we've had a lot of organizations, in the distribution, publishing, clearing, retail, and CPG manufacturers reach out. A lot of the data companies are reaching out as well. It's extremely powerful what we provide, not just, and this was part of my strategy was, Rob, Fobi data exchange, real-time analytics, this and that, forecasting, AI, modeling. What happened to that? And that's gone nowhere. It's gotten stronger. The data segmentation piece of which we've built out now is extremely valuable. And this is why, the likes of the companies you mentioned here have knocked on the door and are sitting at the table, because it's attribution that we're providing. It's measurement. That's one of the key ones. It's real time. It's verified, and it's extremely powerful. It hasn't existed before. So real time attribution measurement at the transaction level is very, very, very powerful. So for me, when this is a great opportunity. I think once again, it's third-party validation. It brings a lot of credibility to be working alongside with, not just these two, but others that have reached out and understand that it's big transformation. It's a huge, heavy lift for these organizations to undergo what they're wanting, but more importantly, needing to get to. And I think this is something that, going back to early days in my discussions with Cuple's team and TCB, this was the direction. And I was a big believer in that. There's a lot of people that are going to be jumping on the bandwagon here in short term. And like I said, for us, we only benefit from this. And we'll, the gateway bridge, if you will, is going to be very plentiful for us.
How does recent developments / conflicts in Europe impact your business and or in Europe and worldwide from a short-term perspective?
For me, it's a tough one. I'm of Ukrainian descent. I have family in the Ukraine. Quite frankly, it's hard to believe, but That being said, we continue to push forward. We've got partners that are affected that we're looking to help and assist, and we'll continue to do so. It doesn't impact us greatly directly. I would say it's more so about focus on positivity, and I think we've all seen enough and witnessed enough over the last 2.5 years, and this to me is kind of the boiling point, but doesn't impact our business, Devin. It's for me, it's about hopefully one day here the world becomes a better place, and a lot of things like are going on today's time. We do see change.
And we have about time for one more here. Now that COVID's coming to an end, how does this affect the company?
As I said earlier, this is a great thing for us, and for many reasons, because businesses are going to be able to full scale open, as conferences and events and stuff, trade shows, huge part of what was missing. Our venue management piece is continually evolving. And as I said earlier, the need now, it's not just nice to have. The need for digital transformation is at it's paramount here, and this is extremely well positioned to do so. And why I'm very confident as to where we're headed here, and focused on such. And as I said earlier, each day we look to get better and to move forward, and be part of the solution, not part of the problem.
Great, and that ends our Q&A section. I'd like to, first of all, thank you for all of our listeners and shareholders that were able to join us today to get a better understanding of the financial updates from both Mark and Rob. But Rob, I'll pass it off to you for any final words before we sign off here for the day.
Thank you for everyone for taking the time to join and for the questions. As I said, for us, we're focused on positivity and growth. And, it might not be as fast always as people like, but the one thing I can say is that the business is not represented by current share price and what some of those have to say or think. It is what it is. And for us, we just continue to focus on strategy and execution and accumulative growth. And that's where our efforts are going. And we look to further create shareholder value throughout the remainder of the year and move to becoming cash flow positive. And that's really the only thing I focus on: revenue growth and becoming cash flow positive. So we're not going anywhere. Like I said, pain's only temporary, and difficult times don't last forever. We're all gone through a lot of difficult times and continue to push. Like I said, I'm ever more focused and than I am today. Obviously, not happy with what's happening, and globally, not just here at home, but focused on growth and development and execution. That's all I can do, and that's all I will do.